Good morning. Welcome to the Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Greg Newman, Senior Wealth Advisor and Portfolio Manager at Scotia McLeod, will be joining us for the hour. Then in 30 minutes, we'll talk about SpaceX as the company prepares for its debut today with the largest IPO in history. We'll be joined by Andrew Benson, founder and CEO of Hill.com. And of course, we want to hear from you this morning on First Call. Reach out with your questions on North American stocks, and we'll have Greg answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Oil prices are down today, down more than 3% right now, with the renewed push for a deal between the U.S. and Iran to reopen the Strait of Hormuz. This comes ahead of next week's G7 summit in the French Alps. Iranian state media says the draft deal includes a commitment from the U.S. to lift oil sanctions, and Iran would reopen the Strait of Hormuz within 30 days. U.S. President Donald Trump once again saying that a deal with Iran will be reached this weekend. Shares of SpaceX are set to begin trading today. Elon Musk's rocket, satellite, and AI company raised the largest ever amount in an IPO at $75 billion U.S. Could go even higher, depending. SpaceX shares will be priced at $135 a piece and will trade on the NASDAQ under the symbol SPCX. The deal values SpaceX at $1.77 trillion, making it the seventh most valuable company in the U.S., ahead of Tesla. Of course, that is Musk's electric vehicle maker. The federal government has unveiled a $3.2 billion plan to address food security and the high cost of groceries. Food is 31% higher than it was in April 2020 when COVID-19 hit. Prime Minister Mark Carney says a country that can't feed itself or fuel itself or defend itself isn't truly sovereign. He says to protect that sovereignty, Canada has to take control of its food system. And now our top line story. Global markets are rising as hopes grow for a U.S.-Iran deal to end the conflict. Look at those numbers there after the late surge yesterday as well, pushing those numbers up high. The S&P 500 pushing towards 7,500. The NASDAQ is eyeing 30,000 again. Now, the stocks are up, bond yields are falling, oil prices are dropping. All this as tensions ease. At the same time, investors are showing strong interest ahead of SpaceX's expected debut. Let's digest all of this with our guest for the hour, Greg Newman, Senior Wealth Advisor and Portfolio Manager at Scotia McLeod. Greg, thanks as always for joining us. Always
great to be here.
All right, we're going to talk tons about SpaceX, but
yes.
Just your initial yes or no, would you buy?
Oh, gosh. Well,
too long.
No, listen, this is the question I can't really answer because we're on the syndicate.
Yeah.
I can't really, but I'll say this. Listen, the deal is 5 times oversubscribed. And they carved out 30% for retail and ended up going down to 20%, which shows there's a lot of strong institutional interest. That said, this is an Elon Musk play. And Elon Musk, you got to believe in Elon. And the math, is a little bit stretchy. But it's always been that way with Tesla. Okay,
we're going to talk tons about it. I just wanted your initial reaction to it. And now
it's going to be exciting. I'm going to say that.
It is. I think so. I think a lot of people are looking at this like Christmas today, aren't they? Christmas in June.
Something like that. And you do have all these other levered products. As soon as this comes out today, like at around 10:30, you've got maybe 6 ETFs, bullish ETFs, bearish ETFs, 2 times up, 3 times up. You got a CDR in Canada that's going to be tracking it. So this is the story of the day for sure.
It is. And also, which is funny, it's amazing that really is overshadowing the fact there may be peace in the Middle East. I think I'm stretching that term a little bit.
Crazy that this is such a big moment because, this other thing is a really big moment, right?
And with that, with Iran, because we want to get into that right now, because we're going to be talking so much about SpaceX. Is there reason for optimism on this one? I was looking at some of the deals, like it's a 60-day, or some of the points in this 60-day ceasefire on all fronts. The Strait of Hormuz will be reopened immediately. The U.S. blockade of Iranian ports will be lifted, and the agreement satisfies all U.S. requirements on the nuclear issue. It sounds like the Americans are ready to give up all those other things for the nuclear issue. That's the biggest one. Is this one going to hold?
Oh, geez. That's something that I don't think anybody knows. And, it seems like it's a deal for a deal, right? It's a deal to see if we can get at it. And how has that worked in the past? I mean, that's always been really tough. But let's be honest. I mean, markets seem to be buying it.
Absolutely.
I mean, it really turned markets around yesterday, and oil markets are falling. So, and I think, listen, I think Trump likes his wins, right? Yeah. I mean, you saw that with other geopolitical things that he's done recently where it's only half done, maybe, arguably in certain places, but he caps it as a win. So I don't think he himself thinks that he's going to go all the way and get everything done. But if he can frame it to his electorate that, hey, we've done this, we've satisfied this, we've bottled this, and we're, between these two goalposts, I think that might be enough for him, and I think that's what all that he's going for. But is this thing over, really? I would doubt it.
Well, and the big question, I guess, from the Iranian side is there a government that has control over all aspects of Iran right now? The government here can be saying in Tehran, they're going, we're done. We agree to this agreement. Yeah. And then you've got little regional factions that are saying, like, no, we still want to be involved in this matter.
Yeah, we have no idea really what the command and control, who really is calling the shots, little factions, and there could be little breakaways. And even though one group says whatever, there's other people that have firepower in Hormuz, and you don't even need to do anything. You just need to scare people that something could happen, and then insurance isn't going to cover it, and oil's not going to flow as much. So it's a thorny situation. And if my personal opinion is, we're not going to have $20 less oil. We're not in the world pre this Iran war. We're going to have premium for oil because of Hormuz for quite some time.
Yeah. And with the market's reaction, it does seem like it's been extremely positive. Is that also tying in with SpaceX, with the fact the Nasdaq took a hit, and the markets took a hit end of last week into this week, and there's a little bit of buyback on that as well? Do you think?
Yeah.
All of it's just kind of come together today.
So really, that's a really good question, because I think SpaceX is very interesting to assess for a number of reasons, but also to assess the risk perspective that's out there in the market right now. And there was big risk off just like 2 days ago, 3 days ago, 4 days ago. So what's changed? Listen, earnings are staggering. People don't really understand just how good they are.
Yeah.
I mean, they're up maybe 26% for this year. Next year, they're really strong as well. And even though you've had inflation, even though you've had oil prices, it hasn't really crimped that story yet. So as long as, unless something really changes this earnings picture, I think it's a bull market. The exact moment that you're going to want to buy is tough to know, because you can have a really tough tape, and then all of a sudden you have an announcement of a deal, and then everything just turns around. But there are bullish things. Like, there's $8 trillion on the sidelines. With all this money that's been spent in markets, there's still $8 trillion. Short interest really was climbing this week. It was climbing to the highest level since 2011. When you have such high short interest and you have a catalyst, everybody's got to buy back really quick. And I think that's part of what you're seeing in the tape right now.
All right. So if this holds, then we could see the market surge again, couldn't we?
Well, it's often there's.
It's been surging like crazy anyway.
There's buy the rumor, sell the news.
Pullback,
I wouldn't be surprised, if a deal is done that you could have a sell-off on the news, and apparently they're going to try to get it done this Sunday, but we'll see if that happens.
All right, lots more to
talk.
Lots
of drama.
What a surprise as the world turns.
Yes.
Kids, remember that soap? Okay, up next, we'll take a look at the markets before the bell, and we'll see why investors may want to look into options while navigating volatility in the markets. Let's see how things are shaping up on the markets with the news out of Iran. No surprise, everything is on the plus side right now. For now, we'll see. And of course, the SpaceX IPO, everything's kind of looking green. You got the Nasdaq up by about 0.45%, 29,600, just hit it there. And the S&P 500 up by a little more than a half point at 74.35. Asia, you'll see a surge there as well, responding to the news out of the Middle East. It looks like there might be an agreement A more long-lasting one, shall we say. The Nikkei up 2.8%, above 66,000. Hang Seng up by just under 2, and the CSI 300 up by 1.16. In Europe, green across the board there as well. The FTSE 100 up by more than a point. The CAC 40 up by 1.8, and the DAX up by more than 1.5. All of that reacting to the news out of Iran. So the TSX yesterday, like everywhere else, had that surge with the news out of Iran and closed at 34,671, up by 1.5%. Some of the movers and shakers from yesterday. Abra Silver Resource up by 10.7. Energy Fuels 10.5. Going the other way, Constellation Software, even the losers weren't losing too much yesterday. Constellation down by 2.7, and Northwest off by 4%. And taking a look at the metals, you can see them surging on the news. Look at silver up nearly 5% right now, but it had been dropping like a stone for the last little while. Still only at 67. Gold's back up above 4,200 after threatening to go below 4, and copper's up by 1.78% at 639. Western Canadian Select yesterday. That's on that turn at the end of the day. Dropped by 2.77%. And for today, WTI. So dramatic. There we go. Yeah, up by 3%. Look at that, below 85 a barrel right now. And I'll show it to you again. It's so dramatic. All right. So, markets are a little shaky. The VIX is rising. Again, it's kind of been hovering, but it's up a little bit. And so maybe now is not the time to pay full price for stocks. Is ever a time to pay full price for stocks? Greg is going, well, no. Instead, strategies like selling puts and calls can help you target prices you like and collect income along the way. Let's get more on this now. Greg Newman from Scotia McLeod. Greg, never pay full price, right?
Well, listen, there are times when markets are off, or there's just outstanding value and you can just go in and buy. And we talk about that all the time. Buy here, wait to buy at 10% lower, that sort of thing. But what do puts and calls do? I mean, first of all, you're going to have a real nice tape today, right? Probably, at least at the start of the morning. So, look, you've had this enchanted run with the Canadian banks and like Royal Bank, for example. I still like the sector. I still think they're going higher. But let's say you've got a little too much Royal Bank and you don't mind maybe selling a little bit at $280, $290, $300. Right now, you could sell. You can oblige yourself to sell Royal Bank at $280 between now and the end of December. Get paid $1,300 a share. So if you got 100 shares,
$1,300 a share.
You could get, $13 a share.
$13, okay.
$13 a share.
Okay.
Thank you for clarifying.
No worries.
So therefore, $1,300 is what you can get by selling a call
100 shares,
on 100 shares. So not bad. I mean, for something that you were going to sell anyway, you're effectively out at $293. Not saying you want to sell yourself. I'm just saying in markets that are cresting like this and you're looking to take some profits and add some downside protection by taking in this premium that you're going to bank, it's a good way to go. And, for days like yesterday and the day before, when markets were really hitting the skids and we didn't know just how deep this correction was going to be, you take a look at something that Jensen Huang just said is going to be the story of forever and going to make $500 trillion GDP. And he talked about Marvell, which is a great story on a price to growth basis. Doing a lot of exciting things. Of course, it was like $190 about a week ago, and then it was up to $300 a few days later. But it is a story that you want to own, right? Lately, it's been $250. How about obliging yourself to own it between now and the third week of December for $200? So way lower, way lower than it is now, and you get paid about $39 a share. So $3,900 on 100 shares. So really not a bad deal to be collecting all this premium. The biggest risk is.
I was going to say, what are the risks with this?
Okay, what are the
Everything
catches?
sounds too perfect.
Okay,
so what could go wrong?
The
what
risk
cost on that one?
in Royal is that you don't really understand what you're doing, and then Royal goes to $400, and you say, "Where's my shares?" And it's like, "Oh, you got out at $295 effectively." What's the risk with Marvell? Well, you get put in at $200. You think that that's grand, and then all of a sudden Marvell goes back down to 80 or 60, or we go over the top, like the way we did in the .com era, and then so you have to write puts. People often, what they do is they get excited by the volatility, they get excited by the premium, and they say, I want the stock with the greatest amount of premium. That's what I want to take in. But then they're not really loving the name. You really want to love the name. So you really have to be, okay, I'm a buyer of Marvell at 200 less the premium, of 160, let's call it. And I'm okay if the stock goes to $80 because I'll end up buying more, that sort of thing.
So essentially, I mean, the big thing is removing emotion, isn't it? And when you're doing this, you are stripping numbers down and looking at the numbers, aren't you?
Yeah, and the other risk is really when you collect premium and you write puts, often what happens, especially with the good stories, is you get the premium. The premium's nice, but you don't end up getting put in often, most of the time. So then Marvell keeps going up if Jensen Huang is right, and it goes to 500,000, 2,000.
Yeah.
You've gotten the little, tidbits, and you haven't really gotten the full meal, the fulfilling story of owning the stock. So that's the other danger. You don't really get the full upside. But in very skittish markets, the point of puts is you really want to identify, okay, these are the stocks I really like. I like them at this level. Give me some premium.
All right. And do you look beyond the headlines at that, or do the headlines matter too?
Well, listen, always we're trying to dig behind the headlines and really figure out
But are they part of it though too?
Sure, because like the premium, the headlines are driving the volatility. The volatility is driving the premium that you're going to get. So for sure, the headlines are important, but you always want to really understand what you're going to be owning, and you want to understand the sum of parts. And so look, picking stocks to me is like panning for gold. It's kind of boring. You're just going like
shake,
this.
shake.
Shake. It's like, no. And then you find one, and you find.
Then you got to make sure it's not fool's gold.
Yes, and you got to find out, you got to find one that is sleepier. The market isn't quite seen. Maybe it's had a move, but it hasn't had a big enough move, or maybe it's just being ignored. But that's the process.
And what makes it sleepier to you? Like, what draws your attention to the sleepy ones? What are the things you look for when you go, okay, now let's go?
It's the most exciting part of what I do. So it's kind of boring. You're going, shake. And then all of a sudden you find something and you think you see something that really not too many people are looking at. Maybe you don't want to say you're the only one doing it, but let's say you're the third percentile or the sixth percentile. When you see that, you can really score big points for clients. And that's the name of the game.
But is there any one thing that draws you to it? Or is it just
that's a great question. It's that is the love of the game. I mean, really, it is. It's a sport in a way, and trying to figure it out before the crowd. I mean, because listen, there's hundreds of millions of people playing this game, right?
Yeah.
And there's a lot of really good minds, and how many analysts are covering Apple and everything? Is there really a time when you're going to see something that they're not going to see? So it's going to be harder to do it with a stock like Apple, but there's tons of companies, in the mid caps and the S&P or in the TSX, which are smaller companies, where markets just aren't as efficient, coverage isn't that as robust as is there. So you can find a lot of those opportunities with the TSX.
All right, we're going to wrap it up on that note. We'll see what's some of the ones you like, the opportunities you're seeing. We'll be back with Greg to see why gold is on his radar. Panning. Time for On the Radar, and we're back with Greg Newman, Senior Wealth Advisor and Portfolio Manager at Scotia McLeod. We were talking about panning for gold.
Yeah.
And now you're liking some of the companies that are literally panning for gold, or involved with panning for gold.
Here's the thing. I mean, I have been somebody that's been saying for a long time, people have been saying, are you a gold bull? And I'm like, I don't know, because gold is a tough commodity to play, because gold is not really sum of supply and demand. It really is investor appetite, right? Unlike copper. Copper is supply and
even
demand.
Silver, too, you could argue.
Yeah, and silver has a lot of industrial uses as well. So those are easier to play than gold. So, listen, I will say that here down at around 4,200, gold looks interesting. It didn't hold its 200-day. It broke. A lot of people get really concerned when that happens. That's usually a buy when people think that, it has to hold the 200 and everybody gets disappointed. And then there's the cathartic relief rally. I think we're probably on good footing here. But, regardless, gold equities are as cheap as they've been in a long, long time right now. Most of them are trading in a price to NAV range of around 0.8 price to NAV. And usually they're 0.8 to around 1.8. So we're really at the low end of the range. So if you think gold prices can hold or go higher, good time to be buying. My favorites here are Nico, Alamos, Aya, gold would be my top three. But it's...
what do you like about them? What gives you the confidence?
Listen, you know what? Life, jurisdiction, if I could sum it up, price to PE is reasonable. Price to growth is very reasonable. They have good growth in our forecast horizon, cheaper than they ought to be, catalyst to, produce and that sort of thing. These are the kind of things that you want to look at. So those three really set up nice to me. But is gold a buy now? Well, listen, you got a hawkish Fed, which has been hurting. You've got a rising cost of ownership as bond yields have climbed. You've got a rising U.S. dollar. These are the three things that shouldn't be happening for gold bugs.
There's
right?
a lot of things that shouldn't be happening right now, it seems like.
Right. So, but do I think gold can find a bid here at around 41, 4,200, and is the correction overdone? Yeah. Everybody in January was asking, what were they talking about? Today we're talking about SpaceX.
Yeah.
We were talking about silver. Remember?
Silver through Christmas into January.
And where did silver get to? It got to like rip
120, I think. Yeah.
Right. And people were asking, do I buy at 120? And it's like when you get to parabolic territory like that, there's going to be a reckoning, and there was. And then it had that one day where it ripped down to 77, and that kind of price action usually takes a long time to resolve. And here we are. Today, we just said $5 climb, $67.
Yeah.
So we're still under that point. I think enough technical work has probably been done that you can finally get constructive on the sector again.
All right, let's talk a little bit about yields. And what were we talking? 10 years, the U.S. 10 years.
Yes, the 10-year. If you want to talk yields, that's the one. You talk about the 10-year U.S.
But is anybody really talking yields right now? Because they haven't done much, have they?
Well, it's
they've come up now lately, but not.
Listen, this is if you want to look at one gauge to figure out where we are. I mean, and you can't just have one, but this is probably the most concise picture, because if yields go too high, first of all, why would people take the risk in equities? I can buy risk-free bonds. That's number one. Number two, if yields are rising because of a concern that the U.S. debt is getting out of hand, that can be very troubling. If yields are falling, it could mean that there's economic pressure. Or if they're rising, it can mean that there's too much inflation, and there is too much inflation, CPI, PPI. But listen, bond yields have really responded in the last 24 hours. I mean, we were around 4.54. Now we're down to about 4.44 on lower oil. So the bond market, which is the smartest market in the world, most money in the world, is believing that there are deflationary forces coming because of this deal.
All right, and so what are you doing with them then?
So, you always want to have your bond allocation for sure. I would say that we're still in an environment where interest rates could, potentially go up, and I wouldn't be going long. I would still be staying very, very short. The yield curve is still upward slope, which is nice, but you don't get great reward if you go 30 years. You might get another point. So why take the risk? If you can get with U.S. money, 4.4 for being 1 year, take it.
Yeah.
Pardon me, like the 1 year is close to the 10-year, but the 10-year, in short money is paying almost as much as long money.
Okay, well, we were gonna touch on SpaceX, but we've talked about it. We're gonna talk about it coming up after the break, so we'll get back to it on that.
Okay.
But right now, we're gonna take a bit of a break. Still ahead, though, that SpaceX is ready to launch. We're speaking with our next guest about that, and of course, Andrew Benson's joining us, founder and CEO at Hill.com. SpaceX, 1.8 trillion. Our phone lines as well will be opening up soon for our first call segment. Reach out at 1-855-326-6266. Send us an email, firstcall@bellmedia.ca. Shares of SpaceX are set to begin trading today. Elon Musk's rocket, satellite, and AI company raised the largest ever amount in an IPO, $75 billion US, and it could go even higher. SpaceX shares will be priced at $135 a piece and will trade on the Nasdaq under the symbol SPCX. The deal values SpaceX at $1.77 trillion, making it the seventh most valuable company in the US, ahead of Tesla, Musk's electric vehicle maker. Okay, oil prices. Look at that. That's the wrong one up there right now. H&R REIT's having a good morning, though. It's up 8.5%. But oil prices are what we're talking about. And they're down. Look at that, up by 2.75 at around 85 a barrel amid a renewed push for a deal between the U.S. and Iran to reopen the Strait of Hormuz. It comes ahead of next week's G7 summit in the French Alps. Iranian state media says the draft deal includes a commitment from the U.S. to lift oil sanctions, and Iran would reopen the strait within 30 days. U.S. President Donald Trump once again saying that a deal with Iran will be reached this weekend. Okay, H&R REIT now says it had non-exclusive talks with Blackstone on a possible sale of certain assets, but it has not reached agreement on a deal. The statement follows reports that Blackstone is talking about a potential acquisition of the Canadian real estate company. H&R has moved its portfolio away from office and retail toward apartments and industrial assets in the U.S. and Canada, but its units have underperformed the rest of the sector. And you can see the markets reacting to all the news that is pretty much positive, although the Nasdaq's pulled back a little bit in the early morning. It's still up by 0.2%, and the S&P 500 is up by 0.37. Okay, it's pretty much what everybody is talking about. SpaceX is officially ready for liftoff. Ground control to Major Tom. It's IPO debuting today. Is this the era of mega IPOs? Can this make early investors millionaires overnight? Oh, it'll do more than that. Is it worth the investment? Here to talk about that and more is Andrew Benson, founder and CEO of Hill.com. Andrew, thanks very much for joining us.
Thank you for having me, Roger.
Okay.
Great to be here.
So many things to talk about with this, but first, initial reaction to what's going on today. What do you think we're going to see?
Well, this is an unusual IPO in many ways, and there's obviously a lot of retail excitement. It's unusual in the sense that they've reserved up to 30% of the allocation for retail investors. And this, I think, is particularly interesting given that we've seen for the last couple of years, when this is traded in the private markets to accredited investors, this has been the most in-demand name over the last 5 years from retail. So I think that enthusiasm will carry over from the private markets into the public markets. And this is the moment that the world will have access to the SpaceX stock. So it'll be very interesting to see where it closes. And I think we're going to be in for a ride. That's for sure.
Well, Andrew, I think you're right. It seems to be 5 times oversubscribed is what I've heard. So that's pretty indicative. But I think what's also kind of interesting here is that Elon set the price. He dispatched with the usual underwriters. And I just wonder, is this the start of a new trend the guy's a genius and he can see other things that the rest of us can't. How about all these investment banks that, fastidiously go over the road show and set the price and the range, and then all of a sudden he just comes out with this number. And if he wins, what's that going to say, right? Interesting.
Well, this is certainly an Elon-style IPO, and I don't think many other founders or executives would have the power over Wall Street to name their own price. And I think that speaks to the excitement that Wall Street has to list and participate in the IPO process for SpaceX. And so I'm not sure if this will be a trend, but with some of the other companies that may come later this year, Visa, Anthropic, or OpenAI, who've also filed an S1 recently as well, confidentially, that I think there could be a trend such as this, but I wouldn't hold my breath on that piece.
All right, and with this, your company helped facilitate the trading of some of the private SpaceX shares. What was that like? And what's going on with that now?
Sure. So what we've seen over the last couple of years here is a large appetite from individual investors as well as institutional investors to be able to participate in these pre-IPO companies. And SpaceX has been a staple of the private markets for at least 5 years, maybe longer. And what we're seeing now is that as these companies graduate from the private markets to the public market, I think that excitement will continue. And SpaceX has been interesting because it's rise has been meteoric in the private markets. Just a couple of years ago, it was around the $100 billion mark. And today, listing at 1.77 trillion. Even for companies that are private, this is unheard of. And even for companies that are public, the time scale in which this is all happening is just so fast. And so there's been a big effort to distribute shares to investors who've participated in earlier rounds, as well as employees who've participated through the equity compensation program for employees. And I think we'll see just a lot of interesting things come on the other end of this liquidity event.
Andrew, we just talked about the bullish case and, 5 times oversubscribed. Is there any thoughts about the fact that there is all this private money out there that might be looking to monetize? This is a very big deal, very widely held by private equity. What are your thoughts on that?
Well, what's interesting about SpaceX is that since 2018, they've been conducting semi-annual tender offers for employees to be able to go and get liquidity, not on their entire position of employee stock, but about 15% on average, is what employees would be able to sell twice a year. And so what was fascinating about those is how few people would choose to participate in those. And we had a lot of people who held on to their stock throughout the meteoric rise in the private markets with the view that they're in this for the long term, and they see an incredible path, even forward. So I wouldn't necessarily expect that all of that will hit the markets in terms of after the post lockup period ends. I'm not expecting all of that to hit the markets right away, but certainly investors and institutional investors will need to distribute the SpaceX shares to their LPs. And I could see some sell-side pressure from that. But in terms of the employees and a lot of the believers, they've had the opportunity to sell, and most have not. So I think that speaks to the long-term nature of the cap table.
And I just want to talk a little bit about the employers, current and former. It's insane how many people are about to become 100 millionaires and billionaires.
That's correct. So our estimate is that about 4,000 current and former employees will have a windfall in the range of 1 million to 100 million. And additionally, beyond 100 million, we anticipate 400 individuals will become centimillionaires, 100 million plus USD from this. And I think this is incredibly powerful, given that there's such a strong thesis and culture around equity compensation at SpaceX. And this, I think, speaks volumes to the types of folks and roles at SpaceX that have gotten equity compensation and that are going to experience massive windfalls from this IPO. If we compare SpaceX against other tech companies that provide equity compensation, SpaceX is unique in that it has a lot of blue-collar labor who works at the company, machine fitters and welders, in all different types of roles that wouldn't typically have the benefit of receiving equity compensation. And this is a case where they did, and many of them will be riding the wave, I think, going into the pricing of this.
Are there any employees that won't become millionaires?
I mean, there certainly are, and I think it will depend on the how it will trade over the next coming days and weeks here. But employees who came before 2016 are, and according to our analysis, the biggest beneficiaries of this across all levels of seniority. And certainly employees who've joined more recently in more senior positions will become millionaires as a result of this. But maybe junior employees who've joined more recently might just be at that threshold. So if it goes really well and it continues to pop the way a lot of people are claiming it might, maybe that number goes from 4,400 to it could be significantly more than that. So we think a lot of folks are at that threshold, right on the cusp of the $1 million mark.
Good for them.
Well, any concerns about saturation? We've been in a market where equity valuations have been shrinking, I think, for 23, 24 years. That's turning around now that we're getting SpaceX and these other two, ChatGPT and Anthropic. And we've seen some selling pressure in the market, maybe to make room for these. What are your thoughts? I mean, do we see a situation where SpaceX does well, but capital's got to come from other areas, in your opinion?
It's certainly possible, and I think that all eyes are on retail as we look at the SpaceX IPO and to some of the other IPOs that are expected later this year, because I think that that is going to be where the demand is, just given how much of the appetite for institutional capital has been satiated in the private markets before it goes public. But certainly there are forms of capital and sources of capital that can only participate in the public markets. And I think there will continue to be appetite from institutional investors in that category as this goes into public trading. But really, I think the headline is all about retail with this IPO.
All right, Andrew, we got to wrap it up there, but thank you very much for joining us today.
Thank you for having me.
All right, Andrew Benson, founder and CEO of Hill.com. Still ahead, today's market drivers with Bloomberg's Janine Panzer. And our phone lines are open. And Greg Newman is taking your questions on North American stocks. Call us at 1-855-326-6266. Email firstcall@bellmedia.ca. Let's take a look at some of the early market movers. We are joined now by Bloomberg's Janine Panzer. Janine, thanks very much for joining us. And we're not going to talk about SpaceX right now. Let's talk about some other stocks. Adobe first up. It's dropping right now.
Yes, good morning. Stocks are dropping pre-market about 6% for Adobe. This comes after CEO Dan Durn is leaving the company, adding investor concern about the shakeup in its management. If we remember, this came just months after CEO announced plans to step down. The reaction came despite a strong quarter. Adobe beat expectation on revenue and earnings and even raised its full-year revenue and profit outlook. However, analysts are saying that the departures are overshadowing the result. Stifel downgraded the stock to hold, citing the transition along with Adobe push towards a larger freemium strategy. That strategy is another concern. Barclay is saying that the company's move to attract more users through free offering will reduce its fiscal 2026 annual recurring revenue growth. Bottom line here is Adobe deliver a beat and raise quarter, but investors focus on the leadership uncertainty and questions how quickly the company can turn the AI-driven user growth into revenue, Roger.
All right. Kratos? Is that how you pronounce it? I'm not sure. JP Morgan, though, is liking it now because it's been on a slide, hasn't it?
Yes, this morning the shares are up about 3% pre-market. JP Morgan upgraded the defense contractor to overweight from neutral, saying that this year's sell-off has created more attractive story, actually. The stock had fallen about 30% this year through Thursday close. JP Morgan said the company continues to stand out among its fastest growing defense companies through three things: contract wins, partnership with larger industry players, and investments in future growth. The bank cut its price target to $82 from $99, though that still implies about 40% upside from Thursday close. Kratos remained well-liked on the street. From Bloomberg data, we have 18 buy ratings, 3 holds, and no sells, Roger.
All right, Janine, thank you for that. Bloomberg's Janine Panzer. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including an upgrade for AMD. All right, time to take a look at some of the notable analyst calls and recommendations. Citi has upgraded AMD to a buy and raised its price target to $575 from $460. The analyst citing AMD's potential to emerge as a major competitor to NVIDIA in the GPU market, noting the company is poised to secure the lion's share of business with Meta. Wolf Research has downgraded Adobe from outperform to peer perform. The analyst cited lingering leadership uncertainty following the CFO's departure and CEO's planned exit. Bank of America has resumed coverage of Williams-Sonoma, upgrading the stock to a buy and a price target of $250. The upgrade reflects confidence in the home retailer's long-term operating margins, resilient e-commerce growth, and execution of AI investments. For more, let's bring in Greg Newman, Senior Wealth Advisor and Portfolio Manager at Scotia McLeod. Adobe, bit of a rough ride right now.
Bit of a rough ride for Adobe. They're navigating away from their freemium strategy. Growth has really been decelerating. Annual recurring revenue is down 55 to 60%, the company says, for the second half of 2026. Yeah, they had a beat and raise, which is good, but that's not what the market wants to see. They want to see really good guidance combined with the CFO departure, and it's really become a show-me story. So this was one of these fallen angels. It was a great stock. It's going to be in tough sledding here until it can really turn things around.
Well, and the AI was doing it in too, right? Everybody thought it was just going to be replaced. It's trying to incorporate it, but it's not making enough people happy.
It's not monetizing fast enough. Listen, when you have annual recurring revenue is the thing, is the metric for these stocks. And when it's down 55 to 60% in the second half for 2026, it's not good for investors. They're running away.
Is it something you think that they can maybe turn around or no?
You know what? Yeah, I do think often great management teams, it's are they going to be able to do something here? I mean, that's the bet. That's the risk. At some point, it's going to get cheap enough where you can start, putting some capital to work, maybe writing some puts, but I don't think we're quite there yet.
All right. We'll leave it on that note there, but we've got lots coming up. When we come back, Greg Newman will take your questions on First Call. Time for First Call and First Email. And for that, David gets the honors. What are your thoughts on XLV? I've been looking at it to balance out my portfolio, State Street Healthcare Select Sector.
So, this is a sector that's kind of been off, hasn't done so great. And so people are thinking, maybe I move a little bit of money. Last summer I was on the show. We always try to identify sleepy areas, and we were talking about biotech, and that was a good place to be parking capital then. Big beneficiary of AI. XLV. These are your Merck, these are your Pfizer, these are your Lilly, your J&J, companies like that. I think they're good. They've been hurt here a little bit by funding in the U.S. and not being able to charge as much for drugs, but thematically we're an aging population, we're getting older, we're living longer, and
we're also more active, a lot of people, which leads to health issues. You've got injuries and things like that. That
companies like Stryker, that are repairing us, right? And so that is a recurring theme. It's always a good place. The question is where do you buy it? I think that you buy it at levels like this. I think the XLV is a perfectly good way to go. Lilly is probably, I think it's their number one holding. I own that stock. I'm looking for ways to buy more of it. Yes, they're the leader in the GLPs. Their stuff works.
Which is a huge one right now.
Yeah, and it works best, and it's going to become much more ubiquitous. But they're also getting into Alzheimer's, which is,
another massive.
So there's massive areas of growth for a lot of these companies, and it's okay to diversify and buy the ETF at times and take a large swath as opposed to having the slings and arrows of follies, as Shakespeare would say, of the GLP wars. And there's been times where Lilly, as good as it is, as hegemonical as it's been, where the competition, the other guys catch up, or they look like they're going to surpass them. So good way to play it.
It happens, and it feels like healthcare though it's floating around. It feels a little lost overall.
It's been a little. That's a good way to put it. It's been a little lost. Yeah.
All right, let's get this email now from Mike. It says, "Good morning, Roger and Greg. Do you still hold AltaGas, and would you be adding new money at this point?"
Well, that's a great question. First of all, the energy infrastructure play is getting expensive, and that's the bad news. And it's getting a little bit crowded. The good news is visibility keeps getting better. The story for data centers, the story for natural gas, the story for moving offshore keeps getting better. AltaGas, is it your best? I'm always looking for the best one at the time. And this one's trading around, giving about 18 times with about a 12% growth rate. You know what? With the dividend, throw on a 2% dividend, you're not bad.
Yeah.
I I think Kiara's the better bet right now, and TransAlta would be the two that I would pivot to. But there's more. I think that if you buy AltaGas here, you're still going to be rewarded because the whole sector is looking really good.
It is, and you don't think it's going to pay a price with if there's a deal in the Middle East? Or
No.
is there going to the interest going to be maintained?
Listen, I mean, I think the story of getting Canadian energy offshore and down south is enduring. It has to happen. Our governments are taking it seriously. Daniel Smith was just talking about how everything's getting fast-tracked. She's pleased. If Alberta's pleased, it's a good sign.
All right. I'm going to sneak in one more question. Do you think that WTI will stabilize? This is from Glenn. Will stabilize at higher than recent lows, and that Canadian oil and gas companies will continue to be? We just talked about.
Wow, that's a really, really good question. So, yeah, I think oil's in a new range, and I think we're probably towards the bottom of the range. I mean, if you really have peace, and then look out below. Oil's going to fall another $20 or whatever. It'll get back to where it was at the start of the year. I don't think too many. I mean, is that a high probability event? It's possible.
Yeah.
I would say it's not probable. So I think WTI is going to be here for a while. The story for Canadian producers is better than global producers because our balance sheets are really good. We've had production discipline for years, and we got natural gas tailwinds, which has been in a bear market forever, and that's changing. I
got to wrap it up there, Greg. Thank you, as always, for joining us. It's Greg Newman, from Senior Wealth Advisor and Portfolio Manager at Scotia McLeod. Thank you, as always, for joining us. Trading gets underway in 30 minutes. The Open is up next.